Hello, everybody. Thanks for tuning in. This is the February 2024 real estate report for Fraser Coast. The report, this is a finance update, part of that report. Today, I'd like to welcome Mark Winter. He's been around he's currently with the Loanmarket, his own business, and he's been around with that for the last 20 years, I believe, Mark. Pretty big name down there in Greater Springfield area. Available for the Zoom calls, mobile. He's a mobile broker, so if you ever need any assistance, Mark would be the man. I'll get your details, I guess, there at some stage at the end, perhaps, Mark, but I could give you everybody, put that in the link.
For sure.
For everybody get in touch. Now, we've had dealings before, I guess, back in 2006 from then, so we've done a few, done referrals for you for some home buyers and got them across the mark and got them.
Long time.
Long time. Yeah, plenty of deals that's happened in that time.
Mm-hmm.
I thought I'd just kick it off, Mark, with how's everything going at the moment. I was just going to ask some questions about the current mortgage market. What's it look like now, the actual market there?
So at the moment, I mean, we're seeing a lot of activity. We're seeing a lot of clients, whether they're buying their first home, dabbling into potentially upgrading, even downgrading, refinancing to get a better deal. We're starting to see a lot of activity. I mean, we've hit the ground running, obviously, since January. So it's certainly, the activity is very much alive.
Okay, so there's been a strong interest in people applying for the home loans. You're getting lots of applications at the moment, Mark?
Yeah. I mean, we've still got the grants available, things like that for the first time owners side of things. The refinances, I mean, we're finding a lot of people coming off the great fixed interest rate honeymoons that they're on.
That's it.
So they're looking for better deals.
The mortgage cliff.
And also, we're seeing, well, I don't want to call it a cliff, but it was just really good fixed rates for the time that we had them. So people took advantage of that, and now they're coming off and realising that the lenders aren't necessarily as nice as they were back then. If they've got a 7 in front of it, they're paying too much. So we're seeing a lot of that, as well as we're starting to see mum and dad dip their toe into investing, because obviously their property prices have increased considerably, and they're considering, hey, maybe we should either dip our toe in and look what investment's like, or even seeing something that they want to buy, moving into that and renting out their current property.
That's fantastic news, Mark, for those guys, for the mum and dads to actually come invest for their children of the future. So that's great news there in that regard. So what's the best interest rates that people can presently secure for both the variable and the variable and a fixed rate, I should say?
So the variable side of things is still the market leader. It's still in the early sixes.
Right.
It's still quite low. So that's sort of where you should be sitting. If you're sitting at any more than really 6.5% is probably the investments point of view. But if you're an owner occupied and you're sitting any more than 6.5%, you're probably paying too much. In the fixed rate, we have seen one lender come out last week at 5.99 for 2 years. Now, obviously, I'll say terms and conditions apply right there, mate.
Right.
Sometimes they've got to have a certain deposit and things like that. But it's nice to see that they're seeing that the trend will actually potentially move down within that 2 years, because they're not going to offer something where they're not going to be able to make any money out of it. So that gives us a bit of hope that we potentially will start to see rates come down in the next 12 to 18 months.
Yeah, that's very interesting, that trend, Mark. So what's the next interest rate amendment? They usually have them at the start of every month on the Tuesday, I believe. When's the next one?
Tuesday.
What's your anticipated?
February next.
Yeah, right. Okay, a few days away. Next Tuesday, is it?
Week.
Right.
Yep.
What's your anticipation for that result?
Mate, all the trends and all the levers that they've pulled in order to get inflation down has worked. So we're confident that they'll probably stay where they're at. My only concern is that coming into March and April, they're going to be using figures that are around December, when obviously Christmas is, most people go out and spend some money. They want their family to have a good time, and that's just on normal basic presents, family get-togethers, all those type of things that cost money. The data that comes from that means that people have been spending out in the retail world, and that unfortunately it really gives a bit of the inflation look is not as rosy as it could be, but it's a bit of a glitch in the matrix, so to speak. That it's only 1 month. It's not something that happens every single month of every single year. So I'm hopeful. We're hoping that it will continue to look at that. There is rumours around though that potentially rates might rise. There's no real factors that would look to attribute to that. Because of the fact that inflation is down, unemployment's going in the same direction, things are looking good and stable. So people aren't spending as much as they used to before, which is even a better thing. Hence why inflation's not as strong as it was. So
I was just going to, thanks very much for that information, Mark. I'm just going to ask you another question there. How long does it take for a finance application to currently be approved? Is there anything potentially holding up applications at this stage?
Not really. It does go through ebbs and flows with every lender. What happens is a lender brings out a really good rate, as you know, mate, and sometimes they get hammered with applications, so their application turnaround time blow out a little bit. Realistically, we've got anywhere lenders at the moment from 48 hours through to 2 weeks is probably sort of the turnaround time to get an description.
So within the 2 weeks?
Yeah, but really, I mean, there's some really solid, very, very good quality lenders that we can get an answer within 48 hours, 72 hours.
Oh, beautiful.
And, so there are good quality lenders that are turning around pretty quickly.
So you alleviate that stress for a lot of home buyers out there. It's such a quick turnaround for approvals.
Yeah, but also I think, mate, like you say, there are some myths out there that our job is to make sure that we help and guide them. And so if it is going to be a week, 7 days, 10 days, whatever it might be, that we can guide them through that as well and just say, look, this is the reasons why. And some lenders are at that because they have a specialised niche in the market, but that they get all the business for that. So obviously their turnaround time isn't as fast as some of those guys that do everything and do it really well. So, yeah.
Fair enough. And I was just going to say, Mark, does it take longer for the first-home buyers to get approved as opposed to somebody who's got a loan before because of all the first-home grants, etc., they have to deal with?
If you're dealing with the grant, the only delay in getting that is to get the approval for the grant from whether it be under the federal, state government or the state government, the federal government one with the boost, with the loan deposit scheme, where they can use them as guarantor, or if you go through the state one with the $30,000 in Queensland, those take a little bit of time. But the turnaround time with those lenders is still pretty strong. So we're talking 3-4 days for them to actually say, yes, we're happy to do it. We're just waiting on the approval number from the Office of State Revenue, whether it be federal or state. But at least that they're willing to do it. They're just waiting on a little bit of a number to come through, and then you should be okay.
Are there many left in the Queensland ones, Mark? Is it because they only have a limited amount? Is that correct?
Well, the Queensland one has just increased to 30,000, and it's the 1st of January. So we're actually just waiting on information to come through to tell us. There's actually according to the website, actually supposed to last till June next year. For the 30,000, there isn't an allocation of spots like there was previously. So we're a little bit unsure of the information. So we're just waiting on the Office of State Revenue to forward some stuff out to let us all know what the story is.
And when's that information due? That's due shortly, you're saying?
Well, we were hoping it would have been by now. We're all month in and no one's got, it doesn't look like forms are out or anything. So they've been a little bit behind the 8 ball. So we're hoping any day now.
Fantastic. And I was just going to say, Mark, is there anything that buyers can do prior to booking a meeting with their mortgage broker in regards to having their application being approved in a quicker time span? Like for instance, you might say, have you got your paperwork ready? They may need to get their ID done, things like that. Is it best to be organised for those guys?
I think the big thing in leading up to a loan application, because obviously it isn't something you just go to, the next day, I'm going to go and get a home and going to go buy a property. If they've been saving some money and so forth and looking towards an investment, whether it be, to live in or otherwise, I think the first 3 months leading into that, if they can start to look at their expenses and how they live, things like Uber Eats and bedding and things like that will crop up from time to time, or Easy Pay, Afterpay, and those things. If they can start to minimise that or get rid of those debts, or even start to go, you know what, we don't need to get the Uber Eats from down the road. Get in the car and go and get it, for example. Those little things, because those expenses all add up. And if you can put yourself in the best possible light, then those little things can help from that side of things. And don't go and apply for any other finance during the meantime either.
Okay, just stick to one at a time. You mean one mortgage, one bank at a time, right?
So if you start going from one lender and then you do an Easy Pay and then you do another one and another one, they all register on your credit file. And if you start looking like you're shopping around or using those type of lenders consistently, then the banks start looking and go, well, are they actually able to manage their money on a day-to-day or fortnight or monthly basis? So minimise those things moving forward, and like I said, those 3-month sort of target areas. If you can minimise those, it's going to help you a long way when you're looking at finance application.
Yeah, they strongly look at all what you've been buying, don't they, on your visa details when you go to get finance. That's for sure. So just a matter of being responsible.
It's not as strict as not as strict as it used to be, but it is still important, because if in the case that there's anything that becomes something obvious to the lender, they will certainly start to look to even further, and then that could be something where it comes up even more. So yeah, it's best to be mindful and have a look at those things in order to ensure that you don't you don't give them any reason to look for alternatives as to not to do the deal, as opposed to saying, look, I am a strong applicant and there's a reason we can borrow the money.
Just a matter of those buyers out there being disciplined with their savings and spendings in order to get approved.
Very much so. Well,
thanks very much, Mark. I was going to say, there's been you have a lot of buyers, they miss out on that house. I had a phone call from a friend of mine at Christmas time, and he missed out on property. And I said, did you get your loan? Was it pre-approved? He goes, oh no, I just saw the broker today, and it's going to take such and such. We've got to get this paperwork and that paperwork. I said, mate, why didn't you get yourself? I mean, I know it's hindsight. He's obviously emotional. I said, why didn't you get yourself organised prior to? He goes, well, we just saw the house and we just sort of thought we'd go and put it in there, and so had that emotional factors coming into it. So would you recommend for even, say, somebody, they may have plans for 6 months down the track to buy? Do you think it'd be a good idea that these people, they do get pre-approved? What's your thoughts on that one?
It's always probably good to talk to a broker prior to going out and having a look, because we can put them in the best possible situation and have a look at their circumstances right now to say, okay, no, you are 2, 3, 4, 6 months away from actually doing something. So you don't go out and emotionally go, oh yeah, everything works really well. Don't look. Sometimes it's best that we tell clients, don't go out and start looking, because you'll find something that you like and you'll fall in love with it, and you're putting the horse before the cart, so to speak. So we always recommend pre-approvals, and they do last for 90 days. So if they are in a position in which to be able to do something, they've still got 3 months in which to be able to find something. So still plenty of time. But if they're in a position where they may need that time in order to get themselves in the best possible light, then we can actually put them on a path to get there as well. And then within that 3 months or 6 month period, say, okay, we're now ready to get a pre-approval, and then we can actually move forward, rather than jumping, all boots in, and then you've got a seller who's then hopeful of getting a sale, and that doesn't go through. Got a agent that's looking at the same thing, is hoping to get a sale, that doesn't go through, and you're wasting a lot of people's time down the track when it could have been handled right at the beginning.
And it puts them on the front foot, because they one thing they forget is they're competing with or they probably don't forget it, but they know that they're competing with other buyers. They've done their homework and they've been organised and got their pre-approval. So any buyer buying today, I think it's normal to reiterate, even to all buyers out there, that it's just so important to get yourself pre-approved before you step out that door, going to put a pen to paper on a contract.
I think, and just on the pre-approvals unfortunately still have a bit of a stigma in the banking sector. So if you walked into a branch and said, I earn this much per hour, they can actually give you a piece of paper to say you're pre-approved. It really doesn't mean a lot. Our pre-approvals, what we class them as, still classed as pre-approvals, but they're more of a conditional approval. So we actually supply the lender with all the pay slips all the data, all the bank statements, everything, so they can have a good look at an overview of the couple or individual, whatever it might look like, or the family network, and say, yes, based on those people, we will lend the money. All they've got to do is actually go out and find something. So there's no hidden pop-up, things that come from left field or anything like that. They're pretty much, the bank is saying, yes, we will lend you money based on this application. So you have a lot more comfort going out there in the market, being able to look, whereas a pre-approval could mean, for example, you say, I earn $100,000, but effectively you have $80,000 as your base salary and you earn $20,000 in overtime. Some lenders will only consider 80% of that. Some lenders will only consider 70%. And depending on the industry, some might not even take it at all. Some may take it at 100% if you're an essential worker, for example, but that's the job of a broker, builder, to say, okay, this is, instead of that $400,000 property that you wanted, you can now only get $330,000 because unfortunately what you were told was that you could have got it, but you couldn't because of the basis of your income and where it comes from in this. And so we don't like seeing any disappointment. We like to overcome all those hurdles to start with, so we can put them in the right position.
Oh, that's great news, Mark, that you actually helped me out every step of the way, so they're ready to go. I was going to say, I think that wraps up the finance market report for the month. Is there anything that you'd like to add or anything to it? Is there anything I missed out?
No, mate, by all means, just, again, get, clients reach out, have a chat. I mean, it's always, I believe education is key.
Right.
So it's better just to have a chat. And even if you're not sure, I mean, the first-time buyers don't know a lot. They always ask a lot of questions, but all of us always have questions. So I always use the adage, don't go to sleep wondering. Pick up the phone, drop an email, ask a question. At least you'll be able to sleep at night, knowing full well you have the information, and that is, knowledge is power. So it can put you in a better position to do what you want to do, from whether it be your first, your second, your portfolio, whatever it might be. It's always best to ask the questions, and we can more than happy to help out. And it is totally free. We don't charge anything for what we do. So it is a great service that we offer.
That's fantastic service, Mark. Thanks again. And if anybody wants to
thank you.
You're welcome, Mark. If anybody wants to get in touch with you, to reach out to you, what's the best method to get in touch?
Well, grab me on the mobile, which is 0423 021 253, or alternatively, you can visit our website, which is www.loanmarket Greater Springfield, all one word, all lowercase, .com.au, and on there has my ugly head, and you can click on the link there and drop me an email. No trouble at all.
Fantastic. And you do Zoom meetings as well with buyers, I take it, as well, Mark?
Oh, mate, certainly do. We do a lot of them. Although we're domiciled here in the southeast Queensland, for example, I've just done 4 home loans in New South Wales.
Right.
All ambulance drivers of different stations. I never met one of them other than over Zoom. So we do a lot of that, and that's just how we operate some of our business as well. And being able to meet them and greet them online, they can see who I am, I can see who they are. That's good enough for the lender as well, and then we get all the information and everything. And most of what we do now is online, so it makes it so much simpler for being able to help anyone anywhere.
Yeah, the age of technology is brilliant and convenient. I'd like to thank Mark Winter from the Loanmarket today, Greater Springfield, for coming onto the podcast for the finance market update for February 2024. Thanks very much for your time today, Mark, and all the very best for the rest of the year.